ADP has your back with Accountant Connect. The award-winning multi-client payroll management and analytics platform is a remarkably effective tool for adding value to every client engagement. Stay tuned to hear more from our sponsor, ADP Accountant Connect, later in the episode.
A third only hear from their accountant 2 times per year or less. So a very easy way you can make the experience better, add a monthly check-in. Just take a look at their books and offer an insight. All right, it takes you...
It makes a lot of sense because millennials kind of are needy, right? so just fill that need and you can charge more, right? Like show up for them, be there.
Give me a hug, David. You're a Gen Xer, right?
We need helicopter accountants. That's what the millennials want. They grew up with their helicopter parents and now they want a helicopter accountant. This episode of the Cloud Accounting Podcast is sponsored by A2X. Blake and I have talked plenty about the massive shift to online shopping during the time of COVID-19. This means that e-commerce sellers are dealing with massive amounts of transactions that need to appear in the general ledger correctly so that you can easily reconcile these transactions with a bank statement. A2X will give your Shopify and Amazon clients confidence in their financials because A2X was created with a focus on the importance of the reconciliation process. A2X posts tidy summaries of sales, returns, and fees from Shopify and Amazon directly into QuickBooks or Xero that will exactly match the deposits that appear in your bank account. A2X has won the support of Amazon, Intuit, and has hundreds of 5-star reviews by accountants and bookkeepers in both the QuickBooks and Xero app stores. Cloud Accounting Podcast listener and e-commerce expert Scott Scharf said that A2X is the gold standard in e-commerce accounting. To learn more about using A2X and get 20% off your subscription by using code CAP20, head over to cloudaccountingpodcast.promo/A2X. That is cloudaccountingpodcast.promo/A2X. This episode of the Cloud Accounting Podcast is sponsored by BQE Core. I recently had 2 Zoom calls with accountants that use BQE Core for their professional service clients like architects, engineers, consultants, and lawyers. One accountant called it the missing link for professional services. Another said that BQE Core is the only game in town for job profitability in the cloud. My biggest takeaway from the conversations was how you can 100% use BQE Core as your standalone accounting system or pair it up with either QuickBooks Online or Xero. Either way, you get to take advantage of all the advanced features of BQE Core like adjustment invoicing, budgets, labor cost, forecasting, contract analysis, and approval processes. To learn more, head over to cloudaccountingpodcast.promo/core. That is cloudaccountingpodcast.promo/CORE.
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
So David, do you have any Thanksgiving plans?
Thanksgiving plans? Yes, we're going to go to Mexico. Assuming, COVID doesn't lock all the borders and et cetera, et cetera, et cetera. But yeah, it's nice down there. Actually, it's Rocky Point. It's the closest beach to either of us. We should go there and meet. It's exactly 3 hours and 15 minutes from your house and 3 hours and 15 minutes from my house. We could go and spend Thanksgiving in Rocky Point.
Well, that sounds great, but the advice from the health experts right now isn't to gather. So I was wondering if you are doing a large gathering, but it sounds like it's going to be just your immediate family, or? Yeah,
immediate family. And then my sister's bringing her family, but they're on the floor above us in the condo. And then you're on the beach, you're outside, there's fresh air blowing.
Hopefully that'll be good. I've been hearing a lot about trying to minimize Thanksgiving. This could be like a giant super spreader event for the whole country in terms of COVID, given where we're at with the case numbers. And I spotted this article on MIT Technology Review, which links to a tool created by the Georgia Institute of Technology. It's called the Event Risk Planning Tool. And you click through to this, and it's a map of the United States showing by county, what is the risk that at least one person at that event will have COVID-19. So if you had an event with 50 people, for instance, like Thanksgiving with 50 people, then in Maricopa County, given our current infection rate, your risk is 43% that one person at that event has COVID. And you can adjust it up or down. If it's like a very large event, like say you're going to, a conference with 1,000 people, then it's basically anywhere in the country, pretty much over 99%. And even with 10 people, it's like where I live, 11%. In some places, it's like even if you had an event with just 10 people in Dewey, South Dakota, 88% chance that somebody in the room has COVID. It's just kind of nuts. But I don't.
It's really ticking up everywhere in this app. Yeah. So in a way, like firms could use this to figure out if you're going to have a gathering at your office. Should you have how many people is it okay to have at your office? Can you have 25% capacity in your office? Can you have 100% capacity?
Right. Let's say you want to have that holiday party and your acceptable risk tolerance is like 10%, then you could use this to figure out if that's possible. Like if you're in, I don't know, Lincoln, Nevada, you could have a 25-person event and your risk level is less than 1%. So it's really all very local. I only brought this up because I love data to analyze risk, and I feel like it brings more logic to the conversation about all this stuff.
Well, even outside of a firm like having a party, just you really think about it, if you're going to have a meeting for 5 of your partners, that's like a miniature party, right? So you probably you could use this tool for meetings or having your staff on site. Like there's other uses for it.
And at my company, we're thinking about having another leadership retreat. The question is if 10 of us got together, would that be safe?
And things have gotten a little wacky already. I've noticed. No toilet papers at Costco again. No toilet papers at Target. Like things have people are starting to get a little wacky again.
Yeah, if you haven't gotten your toilet paper, well, no, I don't want to contribute to the shortage, but yeah, probably a good idea to stock up.
But people are
anyway.
I know people are still going out. Like I was thinking about this. I was driving last night in the evening, and I was like, "Geez, I remember in March, like how empty the roads were driving around, and the roads were busy, and people are at bars and restaurants. People are out, out and about. But I think the big difference, I think this time is before people really stayed, and you only hung out with the same people over and over and over and over again, and it was pretty obvious that people were not hanging out with their families, right, or a closed group. It'd be like 5 or 6 guys at a table and like 5 or 6 random females at a table. And it's obviously they're not all sisters. The thing is like they're probably hanging out with their own family. So there's a lot of crisscrossing going on. And that's probably why people are just not being as careful or siloed anymore. I don't know. Yeah. But then again, I don't think people have the patience for it anymore either.
It's fatigue. It's really hard. It's not easy to isolate yourself. We're social animals. That's what we are as human beings, right? Like we need to be around other people. We can't just be around our families all the time. So it's tough.
We'll get there though.
Yeah. Anyway, I've got more follow-up from our previous episode. The argument you made in our last episode, I've been thinking about that a lot. The idea that Trump's Tax Cuts and Jobs Act, which was passed at the beginning of his presidency, was one of the factors, or you actually think it's like the factor for his loss, in that it inspired people to leave more liberal states to go to less liberal states, and that tilted the electoral map in Biden's favor.
I think Maricopa County and for basically Phoenix is the perfect example. Like that is a pickup truck, Trump flagging, like Mecca, and he lost that county.
It's true.
And we know why. People like you and Californians relocated to Phoenix in massive amounts.
So we got some feedback from a listener about your theory. I'd like to read that. This is from Dan Sears. He says, "Hi, you guys obviously know a metric shit ton about modern accounting, no question, but you're off the wall with the idea that people moving from liberal coastal states to red states swung the election. First of all, people who move from one state to another for tax reasons are less likely to be AOC huggers. They don't move to Wisconsin, Michigan, and Pennsylvania, and you don't get to count every single mover as a full-throated liberal with a 100% propensity to vote. It's pretty marginal, bro. Dan." So, David, I wanted to give you the opportunity to respond to this comment here.
Well, it's probably more than 600,000, but I think in 2018, the articles we were looking at in January of 2019 said 600,000 Californians moved. Take that, divide that by, let's say, equally distributed to 49 states. If you divvy that up, and even if it's 50-50, which is probably not true between Trump and Biden, it's going to probably skew higher for Biden.
Definitely.
Right? Some of these states, that's 12,000 Biden voters. But some of the differences were not much. So it is very, very close. Now, again, this is a theory. Somebody has to go run the data. This is a good ProPublica type thing. Or maybe we can give it to NPR's Planet Money. Somebody could go and run these numbers. But I think it's a very viable reason. We obviously didn't see a blue wave. Like there was, we didn't see this big flip. And I actually think if you have 600,000 to 1 million people stay in California and vote in California, where it has no effect on Trump's electoral needs, he probably wins Nevada and Arizona and possibly still Atlanta and Georgia.
Here's my take on this. I don't think you're wrong. I think that it was definitely a contributing factor that the difference in taxes, it makes a financial difference. I relocated from California to Arizona as a relatively high earner. I'm feeling it, right? I'm loving the tax situation here. But that wasn't the primary reason that I moved. The primary reason was, well, coronavirus. I'd wanted to move before that, though. And the other reasons were cost of living, right? Housing, me being more moderate, disagreeing with the direction that the state is taking from a political perspective up in Sacramento. That was the primary driver for me. And I think that a lot of the people leaving California, it's really housing. Now, that's not to say that the tax situation doesn't contribute to that. It's all combined, right? It's all. And
yeah. I mean, that made it even worse, right? Because now you're like, I can barely afford a house. And then if I can afford it, now I just lose all the incentives to buy my house because the
right.
tax breaks, right?
So yeah, it all changes stuff. But so to me, it's like a contributing factor, not the main one. But what I see is like the big difference with this election, or like the thing that has dominated this election, which doesn't get talked about enough, is automation. And this is the tie back to cloud accounting, at least in our little piece of the business world, but automation more broadly, really broadly, going all the way back to offshoring of manufacturing in the 80s and the decline of manufacturing towns in this country, the hollowing out of the middle class because of automation. It's all linked together. It's all technology driven. And those people, again, this is my theory, and I think it is backed up by some stats, which I can share. Those people in middle America, white middle America, who feel left out by all the economic progress that has happened and are watching their towns decline, and there's no future in those towns, they were gravitated very, very strongly to Donald Trump's message of "Make America Great Again." And
but that happened in the 2016 election. So I'm looking at what's the different variable between 2016 election and this election.
So the difference is that those people hated Hillary Clinton because she called them deplorables and she didn't relate to them at all. And the difference is really purely that these folks, some of them peeled off and voted for Biden. And that's where you see, like in Pennsylvania, the blue wall states, Wisconsin, Michigan, even Arizona. Although Arizona is probably more like the migration patterns, but I'm thinking the states that actually made the difference in this election, a lot of it is that group of people. And so this is actually one of the things that I talked about with David Barrett. I was on his podcast just yesterday.
So this is the David Barrett, the CEO of Expensify, who sent out the email just prior to the election.
Yes, and okay. we had a interview scheduled ahead of all that. And then it got delayed because of the Expensify email fallout. And we finally connected and we chatted. And this was one of the topics. And that's why I'm bringing it up now, is that we talked a lot about the election and automation and this theory I have. And it was a great conversation. We talked for like an hour and it was awesome. It's like, that's the sort of thing that makes me really wish the pandemic was over and we could just, all sit down in a bar and like talk this stuff out rather than having arguments on Facebook, which are hardly ever like. Well,
those are going away because half the Facebook users are now moving to Parler or something.
Parler, yeah. So anyway, that's my theory, is that a lot of automation is displacing a lot of decent jobs that you used to have as a non-college grad. If you went to high school, you could get a great job, and now that is definitely. Would anyone say that's true? That you have a bright future if you don't go to college? It's pretty hard to make that argument these days. And that's due to technology and automation taking away, what we would consider to be routine work. And just in our industry, let's look at bookkeeping. Bookkeeping is a job that employs hundreds of thousands of people, if not potentially millions in the past. And that job is going away. It is not going to be around the way we knew it was. Now, that's different than cloud bookkeepers who tend to be more technology forward and have adapted. I'm talking about traditional bookkeeping. Mm-hmm. That's all, the holiday, it's gone. And those people are sitting in small towns and they don't have jobs, right? So like, what do you do about that? If basically Joe Biden has to figure out how to help those people, or they're not going to vote for him in 4 years. And that's going to take away his whole margin of victory. That's my theory about the election.
No, I get it. It's interesting, the Expensify thing. So this interview is going to be out when?
I don't know when. They're going to record a few different episodes and then put them out at once, which is best practice if you're
all right.
going to do
well, maybe we should ask him if we can possibly after they release, if they allow us to stick that into our feed so our listeners can get easy access to it, that'd be a way for them to get a little exposure on that. But I'd love to, I'm looking forward to hearing it. I'd love to even get a preview. I did notice that a listener alerted us to the fact that on CPA.com, the expense management and Expensify are no longer listed as a solution for your client services.
Yes. Yeah. I saw that yesterday.
Now, did you and David talk about that?
No, it didn't come up. And I kind of forgot about it to mention it. We were so deep into this, conversation, but that is really interesting because I had wondered what was going to happen given that Expensify is a preferred, or at least it previously was a preferred business solution, or is it preferred partner solution? One of those of the CPA.com, which is a subsidiary of the AICPA. And we all know that accountants tend to be more conservative on the whole, especially CPAs. Tend to lean Republican, vote for Trump. So this.
Well, you brought this up initially when we talked about the email.
Yeah.
Yeah.
It was really interesting talking with David because I feel like where I am in the accounting world, being that I work for a technology company that makes software for accountants now, I have one foot in the tech world and one foot in the CPA world. And they're so different. People have such incredibly different views of the world on both sides of that. I feel like I can see both sides, but it's really hard to make anyone else see that on either side.
Yep.
When I talk about Donald Trump and Trump voters and Republicans, it really pisses off, I think, some people in the tech world because there's no way that can possibly be true. And it's almost like this attitude, 50% of the country is insane or racist, and I'm just trying to say, look, there are actual reasons that people have these positions. And the best thing we can do is to try to understand it and to try to understand the economics behind it. Because I do believe that, as with most things, there's an economic reason for a lot of politics that happens. And so, when you take away people's economic opportunity, they gravitate towards extremism and racism. And that is what is showing up at the worst parts of the Republican Party, which unfortunately, but there's an economic reason for it. And if we don't address it, it's just going to get worse.
Well, the economic reason is the more divided they are, both parties raise more money they ever have because of the division. And I actually feel like this whole, even this Trump not conceding the election yet and all this stuff is just a quick way to raise more money. And I think the media loves it because they get more ratings. The longer this drags out, everybody makes more money. Even the Democrats are sending out, chip in emails. You thought all these emails would stop once the election was over, and they're coming in just as fast and hot and heavy as they ever have. This donate money. And I get them from both sides because I make sure I donate a little bit here and there because I want to see what everybody's doing, right? And so I get both sides of the emails, and everybody is playing that fear game. And then this is just a way for them to raise money for their parties ultimately. And that's the real economic thing here. And then the media loves it because they make tons of money from this.
Right.
And this is why you could follow this all the way back to California. The reason the media companies hint at let's get rid of the Electoral College and go to a popular vote, because essentially all the media companies in California get zero benefit from the election. Because nobody runs ads.
Right.
They don't get any of this money. All this money is spent in these other states where
they actually can make a difference. Yeah.
Yeah. So
there's one stat I want to leave you and our listeners with, which this is one that I keep coming back to, which is that when you look at the areas of the country that went for Biden versus the ones that went for Trump this year, 70% of the economy, okay, the counties that voted for Biden make up 70% of the United States economy.
You mean as the GDP or?
Yeah, I'm guessing it's GDP. So what does that mean? That to me indicates that this theory about Donald Trump's supporters feeling economically disadvantaged is true. Is that there is a chunk of the country that, due to automation and offshoring, has very little economic future and has been left out of the gains that we have seen over the last 10, 20 years. And those are the people who feel like we are on the wrong path. And that's why we have such widely divergent views as a country, is that if you're in a city that has benefited from all of this, your economic prospects are great, compared to middle America, where there is no future. And that's the difference. And this is why you're seeing this whole realignment where for the first time, we have people with college degrees more likely to be in one party than people without. So like if you've got just a high school diploma, you're more likely now to be a Republican than a Democrat. And that's a complete reversal of how the parties used to be aligned back in the, Great Depression and all that. I mean, the Democrats have always been the party of the working class. It's very strange. And now it's more geographically, but it's even more economically separated. Like that's the new alignment that's happening. So we have to figure out a way to address this issue of automation. Like, is the solution to upskill people, to offer them training so that they can then be, this is the idea that everyone should learn how to code. But are you really going to take a factory worker and teach them how to code? Like, is this realistic?
So I might have a solution to these problems, Blake.
What's that?
I came across an article from John C. Dvorak, and I don't know if you're familiar with him, but back in the day, do you remember PC Magazine?
Yeah.
Those old, okay. So he always had the back column in PC Magazine. Like he was the first guy that wrote those articles about like Apple, like who wants a mouse, right? And so like he's been covering tech and he's been in this space, but he has his own opinion piece. I guess it's on Substack. I've not actually used Substack a lot, but I think it's similar to like a Medium type format for people to do blogs and articles. And he wrote an article about the time has come for a true wealth tax.
Oh, no.
And in his argument on this is, everybody thinks the solution is to more income tax for the wealthy. Mm-hmm. But ultimately, the wealthy don't have any income. And not only that, they kind of even trick everybody, right? You have these CEOs who are like, I only take $1 of income from my company. The public kind of is naive and they think it's so noble. Oh, Steve Jobs only took $1 of income. Mm-hmm. Then they don't pay any income taxes. The working class foots most of that bill because the super wealthy just they have so much wealth, they can't even spend it fast enough. And you're taxing the people that work. So his argument here is that there should be a wealth tax of 1.8% per person. And ultimately, the people that have zero wealth will never get taxed at all. And, and then if you have your net worth $100,000, you pay $1,800 a year in taxes.
Oh, so he's saying replace income tax with wealth tax?
Yes.
Oh,
and the argument here, people like Warren Buffett, who says Warren Buffett always says like, I should be taxed more, but my income was only $58,000. His net worth is about $85 billion. He'd pay $1.53 billion in taxes. And so then the argument is it's really ultimately getting the ultra wealthy to pay their fair share, and the working and middle class and upper middle class, they would actually pay less taxes than they do now. So folks like us who have jobs would pay a little bit less taxes because based on our net worth. And then the other argument that actually is a good example of this, a lot of states don't have sales tax, they don't have other taxes. All they have is property taxes, which in a weird way is a wealth tax. And some states run their whole budget on this already. So like the model's kind of there. And I'd love to hear your point of view on this. And I'd love to hear other listeners' point of view. But this could, this whole concept of income tax, what's there to tax if somebody only has a salary of $1?
I guess my problem with a wealth tax has always been that if you combine it with income tax, then you end up having double taxation.
I could agree on that. Yep.
And especially if you have like capital gains and then you have a wealth tax, you could tax the same money 3 times. But then there's also the issue like of it becomes complicated. It can to value assets. And then what if somebody's assets aren't fungible? So now let's say I have to sell my business in order to pay my 2% wealth tax. Like it creates a complicated situation. Although this is not unheard of, the Roman Empire was actually funded with primarily a wealth tax, and the tax authority, the tax collectors would basically go around to all the estates in the provinces and would then estimate the value of your farm, right? Like here's how many cattle you have, how many slaves you have, how many the size of your estate, and then assess a tax. And I think like the entire Roman Empire was funded primarily based on like a 1 or 2% tax. It would go up or down depending on if they were at war or not. So it's been done before, but it would be like a crazy change that's just never going to happen. I mean, given the political situation. But hey, it's interesting. I'm glad you brought it up.
And the argument is like the poorest among us can never accumulate any type of wealth because their income gets taxed. It's not fair.
Well, and I think that is an issue, which is that, half of Americans have no stock at all. They don't own equity in anything. If you want to have like a robust middle class and you want to protect capitalism, then people need to have a stake in it. So we need more people to own stock. We need more people to have investments. If people are just earning income and they're not invested in the economy. Other than that, creates a political problem. I don't know if this is a good solution, but I'm in favor of like ways to increase people's wealth in the middle class.
Yeah. So hit the show notes. There's a good quick, easy to read article, but it makes a pretty decent argument.
So let's talk about, well, you mentioned a wealth tax. What about a work from home tax, David? Do you think
I saw that.
Do you think
insane?
Do you think that people who work from home should pay a tax to help out the people that can't work from home? Because that is the argument in a report from Deutsche Bank. Researcher Luke Templeman probably had no idea that he was going to get global coverage for this. The report is entitled "What We Must Do to Rebuild," and he suggests that leaders should impose a tax on people who work from home because between 2005 and 2018, internet technology fueled a 173% increase in the number of Americans who regularly worked from home. I, of course, as somebody who works from home, I mean, David, you work from home too. Like, do you want to pay a tax for having to work from home?
Yeah, it's very headline grabbing, but I'm not comprehending his argument. Can you, what is the argument behind this point of view?
Well, I think due to the pandemic shutting down all these jobs where you can't work from home, those are the people who are suffering. And so this would pay for the recovery. That's the idea. Like somebody has to pay, especially in Europe where they've been subsidizing, right, everybody's salaries a lot more than we have in the US. Like they have massive government debt now. So how are they going to pay for that?
Well, this goes back to that modern monetary theory from episodes ago where like we're not actually paying this burden, right?
Yeah. Well, yeah. I mean, it only goes so far, right? You can only extend the credit line so far before people stop believing that the government will ever pay it back. But anyway.
Maybe we should stop talking about all the things of the world, the problems we can't solve, and get into something simple like, what you can do for your clients.
Okay.
Which you can actually control.
Let's talk about that.
All right. So this is an article that came through. I saw it on social media from Intuit. So it's on the QuickBooks blog. And it's geared towards small business owners. And it talks about personal banking versus business banking. Do you need a separate bank account? And basically this article is headed towards, pushing people, small business owner, hey, you need accounting systems. You need, obviously Intuit's starting to have their own business bank account, right? This is an SEO blog post. But Intuit had a study in here, and I really is an interesting number. 38% of prospective business owners say they intend to set up their own financial and accounting systems. So 38, almost 40% of the small business owners that are new have no intentions to get an accountant to help them or a bookkeeper to help them.
No, doesn't surprise me.
And going back to, I think it was last week's episode, we talked about how Acuity said they were going to start offering invoice management. Ultimately, as an accounting firm, you need to get ahead of these small business owners because they can run for 9 months without ever talking to you. Mm-hmm. Right? Like, how do you get in the conversation of them starting their business on day one? And I'm wondering if just helping them opening a small business account, checking account, is a way to get them in the door. Don't sell them bookkeeping services. Don't sell them anything else. Just hey, I'm going to help you get a business banking checking account, because if you go to the local bank, they're not going to talk to you to help you open the bank account. But now, if there's Relay Bank, there's all these fintech banks we talk about that are online. You as an accountant or bookkeeper could create a service where it's just a lead generator for you. You just help people get their small business checking account set up. Don't even sell them anything else. Just do that, which sets them up for success later on, ultimately.
And it could be really easy to set something up like that if you have a relationship with somebody at that branch. You can just basically refer people over to them, and they take care of them. Now you've got their contact info; they're on your email list. And when it comes time for them to do their taxes, you're there. You're the one they call. And maybe even this bank, if you're lucky, has some sort of built-in accounting software to help them at least do the first few months before you transition them over to something else.
Yeah. And if I had to look at my whole, when I started my own company, the hardest, shockingly hard, was opening the checking account. You thought it would just be go in and open it. And one bank refused to do it. And I had to go to a different bank. So it's shocking how difficult this is, which explains why so many people commingle their personal finances. They already have a personal checking account. It's working good enough. I'll just use that for my business. Mm-hmm. And so I think there's an opportunity here for firms, to get ahead of the game, because selling somebody bookkeeping services is a tougher sell. But selling them hey, I'll just help you set up your checking account. Let's jump in. This episode of the Cloud Accounting Podcast is sponsored by ADP Accountant Connect. How can you stay on top of your game and still have time to think more strategically? Or how do you keep up with all the COVID-19 related stimuli programs to make sure your clients have the documentation to get their piece of the pie? By using ADP's award-winning multi-client payroll management and analytics platform called Accountants Connect. Be your client's go-to guru by leveraging Accountant Connect's tools and resources to strengthen your strategic advisory role while boosting the efficiency of your traditional tax and accounting services. With ADP Accountant Connect, you can process payroll and easily integrate payroll data to the popular accounting systems like QuickBooks, Xero, and Sage, and handle their clients' needs anywhere at any time. And because ADP Accountants Connect was designed by accountants for accountants, it includes so much more. You can take a CPE course on trending topics, provide your clients with benchmarking data, access a tax resource library, calculators, ebooks, even template letters for communicating with your clients. And it's free. Head over to cloudaccountingpodcast.promo/ADP. That is cloudaccountingpodcast.promo/ADP. ADP has your back with Accountant Connect.
So we're on the practice management topic, and I wanted to share another article from Ryan Lazanis over at futurefirm.co. He, over the summer, looked into this. He did a deep dive into this survey by Xero, the accounting software company, about millennials in accounting firms. So millennials, I'm one. We're now in our 30s, approaching our 40s, and we make excellent business clients these days, right? We've matured in our careers. Maybe we own businesses. So if you want to grow your accounting firm, like, where are you going to do it? Probably with millennials. So what do millennials want from accountants? What can we do to serve them better? And one of the takeaways from Ryan is that reducing stress is very, very important to millennials. 39% of millennials are seeking an advisor that is, quote, enjoyable to work with, unquote. And so his takeaway is, make it really easy for them to work with you. I think this is one of those things that's missing from a lot of firms is the customer experience, the focus on the customer experience. Like, you may be an expert at what you do, and you may help your clients get, minimize their tax burden. You're a professional who does it great, but if your client experience is not good, you're missing out on a lot of potential clients. So make it easier for them to get you documents, make it easy for them to communicate with you. We talked about potentially adding even text messaging as an option to your firm.
Booking appointments. And I've seen this data, for dentists. Millennials will pick the dentist that has the online booking form, and they can book an appointment online and don't actually have to call the front desk. That's the differentiation factor. They could be equal dentist. Everything about it's equal, except for that.
I had to find a new optometrist here in Scottsdale when I moved here. And I was shocked when I went to the website and I clicked on the booking link and it was broken. I couldn't book online. I had to call. And
that's like having the front door locked. You go and you can't get into the business. Yeah.
Yeah. So anyway, there's another stat in here. A third of millennial businesses only hear from their accountant 2 times per year or less. A third only hear from their accountant 2 times per year or less. So a very easy way you can make the experience better: add a monthly check-in. Just take a look at their books and offer an insight. All right. It takes you.
It makes a lot of sense because millennials kind of are needy, right? so just fill that need and you can charge more, right? Show up for them, be there.
Give me a hug, David. You're a Gen Xer, right?
We need helicopter accountants. That's what the millennials want. They grew up with their helicopter parents and now they want a helicopter accountant.
That's great.
So I have a story that actually will tie us, Blake, from practice management a little bit into app news.
Okay.
Right. So this is an article that was actually in Dallas Innovates. So it's a local Dallas paper about Ford Baker. So he runs a Dallas-based accounting firm and now a tech company called Baco Tech.
And what's his name?
His name's Ford Baker.
Ford Baker. Okay.
So he's a CPA. So he, at one time, a few years back, he was weighing over 400 pounds, sleeping, and this is 2012, sleeping on an air mattress in his office. And just kind of came to this conclusion his personal life was completely out of balance. I mean, you have to agree, right? If you're a CPA and you're sleeping on an air mattress in your office, right? And your health is really declining, right? I mean, this is probably not a unique story from that point, right? I think a lot of CPAs don't take care of themselves the way they possibly should, and things get out of balance.
Yes.
Well, he went on a 21-day cleanse, started walking his dog every day. And then eventually in 2014, he rode his bicycle from Canada to Mexico all the way down the Pacific Coast Highway and lost half his weight.
Wow.
So he just completely, restructured how he thinks about his firm and the way they did work. And it eventually led to, they have an app now. And essentially this app is, so instead of having that once a year scramble to get all your taxes done with your clients, he basically has an app that's reading data from like QuickBooks and other stuff real time. So at any time, it's almost like having an instant tax return done on any day of the week. So when it's time to actually file the taxes, it's done. All the adjustments during the year have been made. So it's almost like a living tax return he's doing all year. And it's balanced himself out so they don't have a busy season. He doesn't have to sleep on an air mattress in his office. And wow, it's just a cool story. So links in there.
I love that. Things are getting better, right? I mean, the joke is you go into accounting and your life's just downhill from there. There's a positive story. Because
he shifted it out, right? Like everybody in his firm only works 40 hours a week now. And they balanced out that busy season across the whole year by implementing some tech. Now he built this tech and now he's making it available for everybody else. I think he has an ad in our classifieds right now with Baco Tech, but it's just a great story of like, it's not redemption's not the right word, but it is, right? Like you're redeeming yourself from the typical stereotypical CPA stereotype of work 80 hours a week during busy season and let your health go to you have to bleep that.
I will. Well, David, you perfectly led us into app news. So let's get into it. Microsoft now lets you bring your own data types to Excel. This was in TechCrunch like a week or two ago. And I can't believe it took me this long to bring it up because it's actually humongous. This is big news. You know what I'm talking about when I say data types in Excel? We've got dates, we've got text, we've got numbers. These are the formats that have been available to us for ever since Excel was invented.
Yep.
Well, now Microsoft is going to allow you to bring in custom data types. So for instance, you could have a customer data type, and that can bring in rich customer data from a third-party service into Excel. And you can have all of this data, a rich set of structured data in a single cell, and then reference that cell. Essentially giving Excel the power of like a custom database. So you can connect to Power BI and pull in data that you've published there. You can use Microsoft's Power Query feature in Excel and connect to a wide variety of data sources, including SQL Server, MySQL, and PostgreSQL. Third-party services like Teradata and Facebook, and integrate that into your Excel workbook in a way that you would never have been able to do before. There's more than 100 new data types available. You could have geography, real-time stock data from the cloud. This has been available in a limited form through a partnership with Wolfram Alpha, and now they've expanded it. So Excel is not going away anytime soon, guys.
No, and it makes me wonder, you obviously, I use Airtable. We use Airtable for the podcast. Google's launching their kind of version of an Airtable. There's other startups that have came up now and have that kind of same, that's like, where it feels and tastes like a spreadsheet. Right? Smart Sheets is another one that's out there, right? But it has built-in automation, built-in workflow, but it's really a database. It's really relational databases you're connecting up. But so many people in a way use Excel like a database. And so if Microsoft adds just a little bit these features, like why would these other companies could be in big trouble, these startups. And
in this TechCrunch article, Airtable is specifically mentioned as a similar Excel-like tool that people have been using. And I think probably this is a response to that, is the Microsoft engineers saw, okay, well, why are tools like Airtable becoming so popular? It's because they're handling data that we can't handle. So let's do that also.
Yeah, I think it'll be monstrous. Because then it'll just be up front and center to accountants. Accountants don't have to go out of their way to go find Airtable. It'll just be another feature of Excel.
There you go.
It'll be right in their face.
So another big story, huge story really, is that Oracle NetSuite has created their own accountants program. It's called Suite Accountants, and it's going to provide accountants with free access to NetSuite licensing and training courses, one free license for any member of Suite Accountants, and commissions from their referral partner program. Accountants that are part of the Suite Accountants program can earn 10% of the first year of licenses that they refer to NetSuite for people that sign up. And
that's a pretty big deal because like NetSuite's crazy expensive. So 10% of a big, huge pie is monstrous.
It can be very expensive. They have recently brought it down because they're going after smaller customers. You know, they're looking to peel off of those QuickBooks Enterprise users.
Where are they coming in now? About a month?
That honestly, I do not know. Like QuickBooks Enterprise might run you thousands What's a good QuickBooks Enterprise?
I think QuickBooks Desktop Enterprise, if Intuit gets you, I think for everything.
Yeah.
I think it's going to be like $5,000 to $7,000. If Intuit just sells you, they get you for everything.
Yeah.
But the jump to, we talked about this before, the jump to something like a Sage Intacct is pushing in the 30 to 50 range, right?
Well, it comes down. It's come down, yeah. So basically at that like $10,000 per year mark, you're starting to see a lot of competition. So it's like, let's get those QuickBooks Desktop people to pay a little bit more. Maybe we discount it for a few years, right? So it's the same price. Like there's a lot of peeling off at that point. Intacct gets a lot of their customers from QuickBooks Desktop people switching.
Oh yeah, so NetSuite's about $1,000 a month, and then $100 per user. So if you design a really complex system for your client and where they have to invite a lot of users, then you could get a pretty good 10% of that.
Although, like, you start to look at the cost of hosting. Like, let's say you're hosting QuickBooks Desktop on Right Networks and you've got to pay per user for that. Then it starts to become like, yes, NetSuite and Intacct are going to be more expensive for sure. But at what point does the benefit outweigh the additional cost? Because now you can do so much more. And
it's coming down, right? It's no longer like 40x expensive. It's starting to become only like 6, 7, 8x more expensive. It's just, it's getting more price competitive.
Way more price competitive. I would say even more than that, possibly. But again, part of the problem is that it's not very transparent what you're going to pay, right? And I never like that. I wish they were, just more upfront. And that's what's always been nice about, I think, QuickBooks is like you can go to the pricing page and you can see what it's going to cost you generally.
Yeah, I've always told that to accountant bookkeepers, right? If they don't have upfront pricing, like
it's going to cost a lot.
Yeah, it's going to cost a lot. They're going to figure out who you are and then adjust the price based on who you are. Mm-hmm. Exactly. Got it.
But so this will make it easier for accountants to work with clients because they'll basically, it used to be that NetSuite users, companies had to pay for that additional accountant user, which was a disincentive to like work with an outside accountant. But now they're going to get that for free.
Exactly, because now the account should always be free if you're going to add account to the bookkeeping software. No, that makes sense. Xero released their they call it first half numbers. Basically, it's like 2 quarters.
Yep, because they only report in New Zealand twice a year.
Twice a year, right? So Xero finally passed. Just some highlights in these numbers. They finally passed 1 million subscribers in Australia, and that was a 21% jump for a first half.
So slowing down a little bit, because I recall they were at like 30-40% growth for a few years. In
general, growth is slowing across the board. Even for remember we noticed in the QuickBooks stopped releasing their numbers too because it was hard, right? If you're growing at 40% a quarter, like eventually you cannot keep that up. And so they've but neither side is bragging about their numbers of growth as much because it's slowed. Now it's still growing. 21% is huge still.
Yeah.
Like who wouldn't take that as a growth, right? And so this is, and especially subscribers in a SaaS business, that's huge, right? So the key is they finally passed 1 million subscribers in Australia. The UK is up. They were up another 19%, up to 638,000 subscribers. Mm-hmm. But the problem is North America still, Xero. Their subscribers was up 17%, but they still are only at 250,000 in North America.
Wow. Only 250,000. And what is the QuickBooks Online number in North America?
It's probably 3.8 million.
Yeah.
Like it's pretty high.
Yeah.
The company attributed part of this in North America is because they didn't have their XeroCon event. Now, I don't know if I think that might just be like an excuse footnote to put on something because I don't think that's the reason people didn't sign up for Xero because there was no XeroCon event.
It's like the equivalent of writing COVID-19 at the top of the tax return.
Yeah, because I mean, I think there's a decade of disappointing growth possibly for Xero in North America still.
Oh, and we don't need to go into that. I think listeners know my opinion on that, right? It's you have to know your local market, and the U.S. is so different than the global market. So if you're going to compete here, know your customer. Receipt Bank is now available for QuickBooks Desktop, David. Desktop won't go away. That's my theme for this segment.
I saw this article as well.
They're doing it via Right Networks, I believe. Does it say this in the article that they're using the Autofi tool?
No, but that's what it is though, right? So Right Networks bought Autofi. Autofi was like that middle, it's software to help cloud apps connect to QuickBooks Desktop.
Yep.
And we talked about this, like Right Networks in the past, like they seem like they're the only of all the desktop hosting companies trying to figure out how to not be a desktop hosting company. So Joel Hughes, CEO of Right Networks, basically made a comment. They're hosting 180,000 versions of QuickBooks Desktop still on Right Networks.
Well, 180,000 customers, not different versions.
Okay, or 180,000 cloud-hosted QuickBooks Desktop users. Yeah,
yes.
On there.
Yeah, that's a lot, right? And that's just one hosting company. There are I mean, I can even imagine how many QuickBooks Desktop hosted files there are. Actually, you know what? I know there's like millions of people using QuickBooks Desktop. So Right Networks is like one of the largest hosting companies for desktop. That must mean that there's still millions of QuickBooks files that are just on a local computer somewhere, right?
Yeah, there's probably, if you work up backwards from this, if Right Networks has 180,000 and you have those top 20 hostings, and you start going, it's going to trickle down the market share, right? So you could probably bet there's 500,000 QuickBooks desktops that are hosted, which you're right. That leaves about 1.5 million that are just running on a hard drive in somebody's back room still. So
still like a huge opportunity for these hosting companies, right? And this is in the world of when you've got pure SaaS available. It's really amazing.
You as an accountant or bookkeeper, your firm is to get these people to move to cloud, because every hard drive crashes once every 4 years, right? Yeah. And so the next time their hard drive crashes, instead of rebuilding their whole desktop system, there's your opportunity to move them to a cloud solution.
Or at least just have a service where you back up their hard drive, their QuickBooks file. I got so paranoid when I was on QuickBooks Desktop. I had like an automation set up to back up every hour, because I would regularly lose 3. I had multiple instances where I lost half a day of work. And so eventually I just started backing up every hour.
Yeah. So that's good, though, because things like Receipt Bank help tiptoe your clients into the cloud.
Yeah.
Like, okay, at least they're putting the receipts in the cloud, and that's being scanned, and there's a little bit of automation happening for me as the accountant or bookkeeper, and be able to just do that into QuickBooks Desktop. And then it's good that they do it this way, because ultimately the big problem with a lot of the hosting situations is you can't install a third-party app.
Right.
Because essentially you're not in control of your computer, the hosting company is. Right. So you can't install apps. So they have to have a program like this to allow people to install those apps. So basically 180,000 QuickBooks people now could be a little bit more efficient because of this.
Avalara. I always say it wrong. It's Avalara, right? Yeah. Avalara, the sales tax automation company, has bought Business Licenses LLC for $97 million. This is a company that provides software and services for the research, acquisition, and management of business licenses, registrations, and permits for businesses of all sizes. And we've seen this before with Avalara's acquisitions. They are really trying to solve the whole workflow of not just reporting the correct amount of sales tax, but also filing those forms and now even registering to
the full end-to-end compliance flow.
Yeah.
This would be interesting, because Intuit purchased a company like this back in the day. Actually, I think they purchased 2. I think they actually purchased like a company to help make business licenses and get you registered, and I don't know, whatever. It just kind of, these acquisitions happen with these big companies, and then it just kind of falls off. But Intuit did buy a bigger company, and I forgot it was like, their name had something Docs in it.
Yeah. I remember
Doc sounds something like that. And basically it was this huge SEO play, and it had great traction until Intuit bought it. And people would go there, and it would have, if I was going to open a business in South Carolina, everything I needed to do was located there. And I think Business Licenses LLC is kind of a similar product like that. So it'll be interesting to see what happens as these companies that were kind of highly niched and really good at that one thing, how they fit into a big behemoth like an Avalara now. Yeah. And does it kind of die, or does Avalara actually pull together and this really flows to a whole compliance thing?
So that's all I got for app news. One of our listeners emailed me about my personal tax situation. We were talking about people moving from California to Arizona. And I said, I haven't even thought about what I'm going to have to do, because I've never really had to worry about that. Well, Juventino Gaitan, one of our listeners, he is at JG Tax Pro, emailed me and just offered me some tax advice, which is awesome. I love getting free advice.
He should have value billed you.
I know, right? And so he helped me out. And then we got on a Zoom because I want to ask him, well, how do you know about this stuff? Because he said that, he mentioned it because he deals with a lot of this as a tax professional, because he is in the military. A lot of his clients are military folks, and they move around a lot.
Yep.
So income tax nexus is a big issue. So we spoke yesterday, and I want to play some of those tips for that interview for you now. Welcome to the Cloud Accounting Podcast, Juventino Gaitan.
Thank you, Mike.
The backstory for this discussion is that David and I were talking about state income tax nexus around the concept of remote work on one of our recent episodes. A lot of people are working remotely, and so they may have state income tax in multiple states that they had never worried about before. What do I have to worry about? Like personally, when I come from California to Arizona in the middle of the year, what do I have to worry about? Because I want to get some free tax advice out of this podcast.
Yeah, no, your situation is pretty common in the tax world, and I'm sure there's plenty of other people that would like to chime in and give you their personal advice. When I heard you in the last week's podcast, and I saw, this is an easy one that I can provide a little bit of value and input. But the biggest thing is in California, for specifically speaking, for the folks that are wage earners that get paid on a W-2, they get taxed on their worldwide income for California state tax purposes up until the point, you become a non-resident, like in your case. You get taxed on the income that is sourced to California. If you're an independent contractor, it works a little differently. There's a 19-point test that gets done, and what they look at there is where is the benefit being received, not from the independent contractor, but from who's being serviced. So
okay, got it.
Works a little different in that case.
Okay, so my employer is still in California. I'm in Arizona, so I'm going to have to file an income tax return for California, and it'll be for the part of the year where I was living in California.
Correct.
That seems simple enough. Are all states like this?
No, there's actually, and this is more towards like the Midwest and back east, there's about 6 states that have, for convenience of the employer clause, or it's really the convenience of the employer. And what they do, so it's like, off the top of my head, I think it's New York, Pennsylvania, Nebraska, and a few others, primarily in the New England states. Massachusetts just started adopting this during the COVID, so there's going to be a whirlwind there. But what they do is, let's say, for example, you live in Vermont, and then you work for a company and commute into New York. So now you're getting taxed Vermont state taxes and New York state taxes. But what Vermont does is they'll give you a tax credit for the income that you earned while working in New York. So
I'm not double taxed.
Right. So that's how they avoid the double taxation. However, what is interesting during this situation with the pandemic, like in the case of Massachusetts, the legislation they're pushed forward, and the way they're doing it is that if you live in, let's say you live in New Hampshire, which is a non-earned income tax state, and you commute into Massachusetts, now they're going to try to tax you on your Massachusetts income if you're teleworking from New Hampshire.
So I live in New Hampshire. I used to say commute to Boston. Or something. I don't know. My employer's in Boston. It used to be that I would not be taxed in Massachusetts on that, and now I'm going to be.
You would.
Oh, I would. Okay.
Yeah, because your income is being earned because you're commuting to Massachusetts. Now you're teleworking and you live in New Hampshire.
Under the old rules, I wouldn't be taxed because I was at home in New Hampshire, and now they're trying to tax me on that.
Yes. So that's a new legislation that's gone through in Massachusetts.
Well, and that makes sense, right? Because otherwise Massachusetts could lose out on a whole lot of revenue. I mean, that's right? Is that the reason they're doing this?
Sure, but the interesting thing here is New Hampshire doesn't do state income tax on earned income. So what are they going to do? How do you prevent double taxation? Because what are they going to provide a credit against? Like in the case with the Vermont, New York. So it's just a weird situation we're in right now. And I think the latest thing that I've read for New Hampshire is they're going to have some lawmakers do litigation with that stuff.
Right, because they can't make up for it by giving you a credit because they don't have a tax. So
yeah, New Hampshire's going to watch out for their own residents, right? They're going to be like, hey, wait a minute. And then on the business side of things, that's going to create, post-pandemic, when everything goes back to somewhat normal. You think about it, it's going to provide a reason for more businesses to not do business or not relocate to a state where they're going to have to deal with these types of issues.
Right. So I, as a business owner, I would want to locate my business in a state where, the state isn't trying to tax all of my remote employees in that state.
Yeah, where there's some kind of, reciprocal benefit for both. Like, California, Arizona, Nevada, and Oregon, we're kind of pretty low key in that respect because California says you're only going to get taxed as an employee for your California sourced income, whether you're a resident or non-resident. If you're a resident, you're going to get taxed on your worldwide income.
Just to be clear, California source means I'm in the state working.
Correct. That's the way our statutes are written, is that you get taxed on the income that you're earning as a non-resident for your California sourced income as you're physically in the state. And some other states have it that way as well. You have to be physically in the state to get taxed on that income that you earn.
So if when the pandemic ends, I start taking trips back into California to go to headquarters, I've got to count those days.
Yeah, essentially, as a non-resident now, yeah, technically you should.
Gotcha.
There should be a way for you to say, let's say you take a week-long trip back to headquarters for some business meetings, then technically that week is California-sourced income.
So we have a mix of situations here, just to summarize. We have some states that seem pretty reasonable, where they're only taxing you if you're a non-resident for the time that you're in that state when you're working in that state.
Correct.
And then we have those states, seems like primarily on the East Coast, where now they're trying to tax you even if you don't live in that state, even if you never go to that state, just because your employer is there.
Right. Yeah, that's the biggest one that I think of. Like in states like New York, you can be a resident of Vermont and never step foot in the state of New York, but because your employer is in New York, that's where their headquarters is at, that's where they do all their services and everything, and you can be taxed in both. And it's just kind of a weird situation that we'll see how it plays out. There's been litigation before against New York between the surrounding states, and pretty much New York's won out every single time.
A lot of complexity here, a lot for cloud accounting firms to think about, because we can have clients anywhere in the country. And so it presents a tax planning challenge, because how can we possibly know all the different rules for all the different states, right? It's just a massive task. So how do you stay up on this stuff?
Well, because, my background, I started my practice before I separated from active duty Navy. And, I just kept hearing, people talk, the water cooler chat, they talk and they say they got screwed over with their taxes or whatever. And I was fascinated by that and figure out, what's so difficult about it? It's just a bunch of forms, you fill them out and everything. But once, as we do in this industry, we know that as you dig into it, you realize that there's a lot more there than meets the eye. And that's how I got started with it. And I just started rolling with it back in 2010. And every new case that I take on, have a bunch of different interview questions, and you try to figure out where they came from, where they enlisted from. And the JAG office puts out some really good documentation to help the service members and to try to wrangle these things. And they have a lot of good resources there with all 50 different states, or all 41 states that have income taxes, to make sure that they're in compliance. For example, Louisiana, they only tax the first $30,000 of income for military income, regardless of where you're at in the world. So the rest of that, anything above 30,000 is not taxed. So that's kind of the way Louisiana helps their service members. And that was last year's number. So this year's might be different. But every year you have to stay up on the laws, because things can change. And the way I got this client is that they had their taxes done at a big box retailer, and they did them wrong. And it's just because at that big box retailer, they weren't versed in dealing with the military community, even though we're in a big military town here in San Diego. So
active duty military, you're moving around a lot. People have to deal with these issues. So you're familiar with them. And now the rest of the country, it seems all these other professionals that never had to worry about state income tax nexus, now we're getting to know it as well. Do you have any tips for the accountants who have never had to deal with this before that might help them survive the 2020 tax season?
Yeah, I would just say that if you are in a military town, or if you're close to any kind of military base, just reach out to the local military small business office liaison or the local JAG office in that area. And they have a lot of resources for the public, because they know that we live on the economy. We as veterans and military service members live on the economy. And so we're going to go to those local businesses to get these types of services done, whether it be law services or accounting services and that kind of stuff. And so just to stay up on those rules and take as much CP as possible in those areas.
Juventino Gaitan, thank you so much for your time being on the podcast, and thank you for your service.
Thank you.
Oh, that's a great tip. As I was listening to this, I was just thinking in my brain, full circle, let's go back to this migration of people from California. Do you remember 2 weeks ago, you talked about Ryan Lozanis' article about targeting locally, customers locally?
Local SEO being something that more firms should do, yeah.
So every firm should have a blog post that says, I just moved from California to South Carolina, or I just moved from California to Arizona. Like, what's my tax situation? Or do I have to file taxes in California? Like, you should write some sort of blog post that really targets these migrating people.
Answers
because they're going to need extra help.
Yeah. That's a good recommendation. Definitely could be a good search engine optimization strategy. I want to make sure we mention Tino's Twitter handle one more time. He is at JGTaxPro. And jgtaxpro.com is his website. So, hey, thanks for listening, and thank you for your tips. Really appreciate that.
And you can send the bill to Blake.
That's right.
Did we get any voicemails this week?
No, that was it.
Okay.
That conversation. Do we have any reviews?
We do have 3 reviews that came in.
Wow. Okay. You want me to take this first one here?
Yeah.
The title is Helpful, 5 stars, insightful, and these dudes are actually smart. I work in accounting for a bicycle shop and would love to hear more in the vein of GL management and invoicing, as I work mainly on the payables side. And the username is unpronounceable. Thank you so much for that review on Apple Podcasts. Oh, so David, payables, man, that's your realm, being on the Melio side. So I expect we got to deliver.
We could talk more about that invoicing. Yeah. So this is great. So it's like an internal accountant at a bicycle shop. That's cool that we're reaching people that are just not, people with multiple clients.
So, I'm looking for a mountain bike, and all of the mountain bikes I've been looking at, like, they're carbon fiber, they're like $4,000 or $5,000. I'm like, I can't believe it. Is it possible? Am I really going to have to pay that much, or can I find a bike for less than $1,000? Please tell me.
I don't know. I find it shocking every time I walk by a bicycle shop and I see the prices, and I'm like, they're more than I spent on my first car. It's crazy. It's crazy. And then if you had it, you have to constantly worry about somebody stealing it.
I know.
The worry it would bring. And then not only that, you have to the stress of the debt you went in to pay for it. So it's just the whole idea of buying a mountain bike is a bad idea. Just start running, get a pair of shoes that cost you $99.
That's what I've been hiking. That's what I've been doing.
Yeah, there you go. Good. So another review, must listen, 5 stars. So this is on Apple Podcast. I can't wait for each new episode. I value their insights, rundown on the news in our industry, especially that they can break it down from the technical jargon to help explain it to clients. I appreciate this podcast, and the only downside is that it is not longer.
Not longer. Wow.
Not longer. This is from No Nickname 7395 on Apple Podcast. Longer. Like I remember early on, we thought a 20-minute podcast would be plenty good enough. There can't be possibly this much news. And now we're going an hour an episode. I don't know, like more than an hour. It's a lot of work because you have to edit it more. It's a lot to go longer.
Maybe someday. I have dreams about making this a daily thing, but we have jobs. So
I have a suggestion. You could actually get like a podcast player like Overcast or Podcast, and you could play it at like a 0.5 speed, and it'll just be really slow.
Yeah, you can make our hour-long episodes 2 hours. That's a great idea, David. I love that. Here's our last review. This is from Jesse Gildas Game, 5 stars, and this was on
Podchaser.
David and Blake are my go-to source for news about accounting and tech. The firm where I work, Bookstime, primarily serves other accounting firms, so it's super important for us to keep up to date with the latest trends. This is especially true since we tend to work with tech-savvy, modern accounting firms, i.e. the Cloud Accounting Podcast listener base. Listening to this podcast is a great way to keep tabs on the trends and events that affect our clients and partners. Thanks so much, Jesse, and thank you, Bookstime, for listening. That's all the reviews we got. If you want to leave us a voice message, we also love listening to those. We get them occasionally, the brave souls who don't mind calling this number. The number is 202-695-1040, 202-695-1040. It goes straight to voicemail. It cuts you off after about 3 minutes, so just try to keep it short. If you want to leave us a message, we'll listen to it, and we might even play it on the air.
I'd love just to get, even if people are like, I'm pro wealth tax, I'm against the wealth tax, I'd love to hear these things. Or Leary's opinion is crazy about how Trump lost the election.
Down with capitalism. Or you're all socialists. No, we're trying to bring people to the middle. We don't want to encourage extremism, David, right? We're voices of reason in the world. At least that's
extremism is what will get us the most listeners. Like we want high ratings. So the more extreme we can be, the more polarizing we can be on the podcast, we'll get more listens.
This is quite a dilemma. It's an ethical problem.
Yeah, I don't want to head down that path. Like I do like kind of us being a little sane and a voice of reason and trying to bring all points of view to this stuff.
We will. So that's all the time we've got. If people want to reach you online, David, what's the best place for them to harass you?
I'm at David Leary on all the socials. Super easy to find. If it's on LinkedIn, please try just to say I'm not a bot.
Same here. And you can find me on Twitter. I'm at Blake T. Oliver. And follow the show. We are at Cloud ACCTPOD. So short for Cloud Accounting Podcast, because we can't fit all of that into a Twitter handle. And you can subscribe to our newsletter at cloudaccountingpodcast.com and get notified of all the new episodes and happenings, what we are doing. All right. Well, see you next week, David.
Bye. Time for the classifieds. I want to tell you about a new workflow solution called Bacotech. Bacotech is a cloud solution that puts CPAs in the middle of their clients' data. Bacotech gathers clients' data and delivers it to CPAs in real time through one login, enabling CPAs to make adjustments to tax returns and client accounting issues as they happen, not after year-end. Bacotech helps CPAs provide their clients with the proactive services they need and increases the firm's efficiency and leads to working less overtime in busy season. To learn more about Bacotech, head over to bacotech.com. Looking to radically increase productivity as a cloud accountant? Introducing Client Hub's Frictionless Workflow, a unique combination of internal workflow seamlessly blended with client tasks and communications. See how a frictionless experience across your team and your clients will save you hours of time. Get started today with a free trial at clienthub.app. Enter promo code CAP25 for 25% off your first 3 months. Client Hub, truly frictionless workflow. Want to get the word out about your newsletter, webinar, party, Facebook group, podcast, ebook, job posting, or that fancy Excel macro you just created? Why not let the listeners of the Cloud Accounting Podcast know by running a classified ad? Hit the show notes for the link to get more info, and be sure to check out our special stimulus pricing of 4 episodes for just $100.